Welcome to another episode of Profit Insights, where we sift through the complexities of today's financial landscape to bring you clear and thoughtful analysis. I'm Dusty, and today we delve into how global markets are dancing to the tunes of economic data and geopolitical developments. Let's start our journey in the United States. It was a day of mixed sentiments on Wall Street, as the major indices saw divergent performances. The Dow dipped slightly, shedding about 0.3%, ending at 42,982 points. Meanwhile, the tech-centric Nasdaq managed a modest gain, rising 0.3% and flirting with the 20,000-point mark. The S&P 500 hovered near its all-time high, closing down just a hair. This varied performance reflected investors processing a blend of economic indicators and the insights shared by Federal Reserve Chairman Jerome Powell during his congressional testimony. Examining the economic data, the third estimate for the first quarter GDP came in with a contraction of 0.5%, a bit more severe than expected. This was chiefly due to increased imports and decreased government spending. Consumer spending also took a hit, but the underlying strength came in a little more hopeful, with private domestic purchases edging up. Economists are projecting a more robust rebound in the second quarter, with growth forecasts nudging up to around 3%. In corporate news, Nvidia continued its impressive upward trajectory, with shares climbing over 4%, cementing its position as the most valuable company globally. On the flip side, General Mills saw its stock slump over 5% on less than stellar earnings. FedEx also faced a downturn post a tepid forecast. But it wasn't all gloom. Airout saw a remarkable 21% surge on robust earnings, showing the ever-dynamic nature of market reactions. Now, crossing over to India, the vibe was decidedly more upbeat. The Indian stock markets soared to new heights, with the BSE Sensex and NSE Nifty both up over 1%. This continued rise was bolstered by a softer US dollar, easing tensions in the Middle East, and a stellar showing from financial and metal stocks. The mid-cap and small-cap indices rode the wave higher, while sectors like metals and private banking led the charge with impressive gains. It's a reflection of robust investor sentiment, appreciating domestic opportunities amidst a complex global backdrop. Turning to some economic indicators across the globe, the Chicago Fed's National Activity Index hinted at a slight slowdown, while the Conference Board's leading economic index in the U.S. seemed to wave a yellow flag with a dip, though it stopped short of predicting a recession. Across the pond, the Bank of England remains vigilant with its financial infrastructure oversight. Over in China, the potential challenges flagged by the Conference Board might see some cushion from thawing foreign relations and supportive monetary policies. Now, let's sprinkle in a few investment tips. As we sift through this multitude of data, it's crucial to remain attentive to sector-specific developments, particularly in technology and financials, which are showing dynamic movements. Keep an eye on emerging trends from geopolitical shifts. These often herald new opportunities or risks. And remember, a diversified portfolio remains your best ally in navigating volatile waters. Thank you for joining me on Profit Insights today. As always, let's remember, when the dust settles, only the truth remains. Until next time, stay informed and keep your investments wise.